Hi everyone, this is Chris Kimble and founder of Kimble Charting Solutions. Welcome to today's version of Your Daily 5. We try to focus on long-term chart patterns, and so today this is one of our major themes is looking at several different assets and looking back several decades actually. And so this is a chart of the Nasdaq 100 on a monthly basis, or the Qs. And what we did is we applied Fibonacci to the dot-com highs, or here in 2000, and the 2002 lows. And I wanted to share how, we all hear the term that charts tend to have memories, and how this memory seems to continue to be influencing the NASDAQ 100 even during this coronavirus decline that we had. So first off is the 161 extension level off the 2000 and 2002 highs and lows came into play in early 2018, and you'll notice it traded sideways for almost 90 days. And then we had the decline into the Christmas 2018 lows. And so you can see that it influenced it there for several months. And then on the flip side, it became resistance again. And then once a large bullish reversal took place, that off of old resistance became new support, we saw the rally taking place into the first part of this year, being 2020. So one of the things that we try to do to help us find support is actually first look at resistance. And so in this 11-year bull market in the NASDAQ, we looked at the series of higher highs to create potential or find support. And so that resistance line became support off the 2009 lows. And you'll notice in the Christmas decline of 2018 that the NASDAQ came down and kissed rising support, but did not break it. And so that was a very positive experience and message for tech. And then guess what, everybody? It did it again during the virus lows of March, where you see this really large bullish reversal pattern at dual support. And that dual support was the 11-year rising channel and the 161 extension level. So again, it appears that prices going clear back to 2002, 18 years ago, influenced what the NASDAQ's price action was in March. And so the rally is taking place. You can see an upside breakout of the NASDAQ is currently, the month is not over, but at this point in time, the NASDAQ is at all-time highs, and the upside target I just want to share with you on this long-term Fibonacci extension level comes into play at 290 on the Qs, or around 15% higher. So tech is strong. It remains relatively relative strength play over the broad market, and its upside target is still 15% higher above current prices. Speaking of another long-term chart, we're looking at gold going back 40 years, and we applied in a similar fashion to the last chart Fibonacci to the 1980 highs in gold and the 1999 lows, and how a long-term memory came into play 11 years ago here at the 2011 highs. And so again, you'll notice that we took all of these resistance levels and how dual resistance was hit, which was the 261 extension level and the top of this rising channel. So again, what we try to do is use resistance to find support or to create channels. And you can see how gold has remained in a very uniform now rising channels as it's created on a monthly basis, higher lows over the last almost 3 years. So while it's doing this, there's a good chance that it's forming a bottoming pattern, and very much looks to be a cup with an uncompleted handle. And so ideally, the pattern in gold would be to go up and test the 261 level, which comes into play around 1950 on a monthly basis. But the bottom line is, when gold takes out the 261 extension level, the next long-term target based upon the 1980 high and the 1999 low is just short of $3,000 an ounce. And so this is a long-term bullish pattern with a key resistance at 1950. And if that's taken out, look for gold to tack on almost another $1,000 in price. So as we all know, if gold is to do well, you generally want to see king dollar weakness. And so this chart on the left that's kind of compressed is the US dollar on a monthly basis over the last quarter century. But you'll notice that since the 2010 lows, US dollars created a series of higher lows for 9 years. And at the same time, once it hit its 61% retracement level, there's two different monthly large bearish reversal patterns. And so King Dollar essentially is trapped between the 161, or excuse me, the 61% retracement level at 102 and rising support around the 96 level. And so the dollar for now, well over almost a couple of years, hasn't had any major move, but it still is in an uptrend marked by this rising support. And on the flip side, this looks at the euro in a little shorter time frame. The euro continues to be in a downtrend over the last couple of calendar years. And so you'll notice, even though the euro has rallied the last couple of months, and again, this month is 6 or 7 trading days from being finished, the euro is testing its 38% retracement level. And so far, before, as the month is near an end, it looks to be a bearish reversal pattern taking place in the euro. And I wanted to just kind of share a quick look at the Aussie dollar, which is important to commodities, that it's testing resistance at the current time as well. So thinking back on the last chart, as gold is testing resistance, King Dollar is testing support on the left chart, the euro is testing resistance, and so is the Aussie dollar. So when we think from a 30,000-foot view, if commodities and particularly gold is to succeed in doing well, you'd want to see King Dollar break 9-year support, euro, and the Aussie dollar break resistance. And so speaking of commodities and assets that are affected by the currency plays, this looks at the Thomson Reuters equal weighted commodity index on a monthly basis going back 40 years. And so when Reagan was in office, commodities peaked in 1980. Then you can see they continued to make a series of lower lows for a couple of decades, and it took a rally clear back to 2005. So it took a quarter of a century to get back above the 1980 highs. But thinking back of what we mentioned earlier, that charts tend to have memories. I still find it amazing how the 1980 high became the 2009 financial crisis lows. And you'll notice as it was testing old resistance as new support, when investment banks were closing and people are obviously very concerned, that was actually a bullish opportunity for commodities as they bottomed. And so now taking the chart to more currently, back in March, lo and behold, as commodities were falling and crude oil was collapsing, it was testing the 2009 lows and the 1980 highs. And 2009, these lows, I kind of think of the movie by Churchill, The Darkest Hour. We tested that darkest hour, and again, that held. And so that was really, as Google searches for the word depression were really popular, commodities look to be bottoming at that time. But they are facing current resistance as the dollar's testing support. You can see here was the 2015 lows. A big test of resistance is in play, right now. But if King Dollar would break support, look for commodities to break resistance and look for a strong rally to take place, even on a short-term basis. If it remains in a downtrend, commodities could rally 15%. So I wanted to take a quick look at another commodity that has a chance to as a repeating pattern and maybe set up for a nice rally, and this is coffee futures. And you'll notice in these 4 falling blue channels that we've created, breakouts finally took place at these arrows. And 3 of the 4 times when coffee broke out, it tested old resistance as new support. So what does it look like currently? And before we look at that, just to let you know, the average gain on these breakouts was 200% on coffee. So right now, coffee is testing support, which looks similar to the other patterns, and it's also testing a 20-year rising support line. So I wanted to make you very aware of just that an opportunity in coffee. The smallest rally in coffee was 100% on one of these breakouts. So I wanted to kind of keep you aware of where the coffee situation and a sector play in commodities of an opportunity look to be at hand. So as we wrap up, I want to thank you for attending this version of Your Daily 5, and we have a 40% special going on to all StockChart members, and you can find this by going to kimblechartingsolutions.com/StockCharts. Thank you, everyone. Have a great day. Goodbye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.